Companies sitting on $3 trillion in cash on their balance sheets are starting to spend it this week, setting the pace for the month of August to be the biggest month for deals this year. Brad Hintz is an analyst with Sanford Bernstein, and he joins us now with more. So, Brad, in a normal environment, or historically speaking, we'd say this is a sign that stocks are cheap and that corporations are feeling confident. If you look at the equity markets, you're not necessarily hearing the same thing. The economists certainly aren't saying this. What's happening?
Well, that's it. It's the second part. Is it confidence? What we know is we know that the M&A bankers have been active now for the last 2 quarters. They haven't been able to get the companies to pull the trigger. So the companies had clean balance sheets, had cash on their balance sheet, but there's no green shoots for them to look for. So it's really a question of am I confident enough to do that acquisition, or do I want to wait a while and see until the economy's coming back? So we had all the dominoes beginning to line up. If we get a couple of deals going through, like you begin to see in August, what it can do is encourage other companies to do, to jump in also, and you can start getting that competitive bidding. It's pretty early with just August to say that this is the beginning of the cycle, but we. The last time I talked to the Goldman or the Greenhill bankers, they were much more optimistic looking forward into 2011. I think what we can say is 2011 is going to be a better M&A year than 2010, but we're really starting off a pretty low base.
So is this just a sign that financing is cheap in some ways? I mean, who's at the lead in the league tables? Is it still Goldman?
Well, Goldman and Morgan Stanley always fight for the top. JPM is up there too, but the firms that are going to get the biggest kick from an M&A rebound, of course, are the boutiques. And that's Evercore, that's Lazard, that's Greenhill. And I think it's important for listeners to recognize that when a deal gets announced, you really don't get the revenues in for another 5 to 6 months. So what we're seeing even in the month of August really won't be booked until 2011 at this point.
I want to ask you about an idea that was based off of a Bloomberg story that we broke here. Our Jeff McCracken talked about the great deal that Goldman Sachs essentially offered in terms of undercutting its competitors on the price it would charge to take GM public. Basically undercutting the fee structure there, something that's sort of an unwritten rule that banks don't typically do. Are we to look at this and say this is a one-off? Are we to look at this and say price competition among the firms is going to get hotter? Or as Steve Pearlstein in the Washington Post suggests today, is there still sort of a monopoly in profits there?
Equity underwriting is a monopoly. There's only a handful of players who can place deals globally, Goldman being one of them. In a gesture, I guess I would say, in terms of a peace offering to the government, I think the GM deal may have been done in that spirit.
It's a one-off, in your opinion?
This is a one-off. No, the nice thing about equity underwriting is the buyers of the product are not knowledgeable capital market players, so you can charge them a pretty high fee.
Tell me what you're talking to your clients about right now, because I mean, getting back to where we started here, there's still a sense of how do you read the environment with acquisitions happening. It's not necessarily a sign of confidence about economic growth.
No, and you've seen that in the sense that the interest-sensitive stocks, the Schwabs of the world or the trust banks, who will do well in a rising interest rate environment, they haven't been doing well at all. And we've seen investors pulling back from the Goldmans and the Morgan Stanley. All of these are stocks that are going to do well in a recovering environment. I guess what all of my clients are facing is, do you position yourself for a continuing slow growth,
right,
or do you position yourself for that hopefully V-shaped recovery?
And how do you make a macro bet right now? I mean, if you have the giants out there, Stan Druckenmiller talking about getting it right for so long in an environment that makes it that much more challenging to try to make a big picture bet.
Oh, it's very much so. It's a real challenge right now. I think what we know is that we've got the beginnings of an IPO cycle. You can see that in terms of a lot of IPOs being filed. We haven't seen good performance in the IPOs, right? But and so there's the trouble, which is if we can get a couple of good IPOs off that perform well, that will get the demand up in the IPOs. We've got a lot of money on the sideline waiting to do M&A deals, but it's still a very cautious environment. There's nothing that shows the economy's turning.